Saturday night, 9 p.m. and we're back with your weekend summary of the corporate world, Companynama, where we give you all of the week's corporate and startup highlights. I'm Shrestha Tiwari. Over to the corporate updates first. The government is set to approve the chip-making plan of the Vedanta Foxconn joint venture under the $10 billion Indian semiconductor mission. This will pave the way for the centre's bid to establish India as a global hub for semiconductors. Vedanta Foxconn Semiconductors has signed initial pacts with two companies for technology transfer, which is a US-headquartered Global Foundries and European chipmaker ST Microelectronics. The details of the two have been submitted to the Information Technology Ministry, and the government has asked VFSL to submit details of the binding technology transfer agreement with either of the two companies. Further, Vedanta's stock remained in focus on Thursday due to two reasons. The first is that Vedanta's parent company, Vedanta Resources, is in talks with Deutsche Bank as well as several global banks, including JP Morgan and Barclays, to raise around $500 to $600 million loan. The company's $500 million bonds with 7.125% interest are maturing on May 31st. And in another news, Vedanta's board will meet on May 22nd to consider the declaration of the first interim dividend for FY23. After a strong opening, Vedanta shares closed with a slight decline on May 18th. Facing pressure in sales of toothpaste and toothbrushes, FMCG major Colgate intends to expand its business beyond oral care. Apart from oral care, the company plans to focus on personal care segment, and under this plan, it is being considered to increase the focus on Palmolive brand. Colgate plans to increase the focus on body care segment by 2 times, especially through body wash and hand wash. Also, currently the company sells body wash in the range of 172 to 472 rupees. According to the company, it is a small category and penetration is also less in it, and which means there is more potential for growth. To grow business, company will work on improving the brand, launching new products, improving distribution and focusing on increasing the reach of Palmolive brand. And thanks to a big payout by the group's cash cow, Tata Consultancy Services, Tata Sons is set to earn a record high equity dividend worth nearly 33,350 crore rupees from the group's listed companies for FY23, up 130% from 14,529 crore rupees in FY22. Nearly 90% of this is estimated to accrue to Tata Sons, while the rest will show up in its profit and loss account for FY24. This is because nearly 80% of the dividend payout by TCS for FY23 was done before the end of the financial year through 3 quarterly interim installments and a special one in January this year. Reliance Retail is set to bring Chinese fashion giant Shein to India through a strategic partnership more than 2 years after the latter's app was banned by the Indian government. The centre had banned Shein from selling its products in India through its own app, and this was as part of a larger crackdown on Chinese apps following escalated border conflicts. Indian government has now approved the partnership between Shein and the retail unit of Mukesh Ambani's Reliance Industries. The partnership will see Reliance Retail set up offline stores as well as mark its presence online, possibly on the latter's Ajio platform. Shein is also likely to source its fabrics for its global and as well as local manufacturing operations from India as part of a wider partnership arrangement with Reliance Retail. The partnership will include sourcing, manufacturing and retailing, the sources have said, and this comes at a time when US lawmakers, a market where Shein has a big presence, are urging the nation's markets regulator to get Shein to disclose its labor practices ahead of an IPO. The RBI has given SBI Funds Management, a joint venture between State Bank of India and France's Amundi, permission to purchase up to a 9.99% stake in HDFC Bank and has recommended the company to do so within 6 months. The permission has been given in tandem to application submitted by SBI FML to RBI, according to the HDFC Bank, which added that the approval is subject to a few conditions. The RBI asked SBI FML to purchase the aforementioned substantial stake in the bank within 6 months or by November 15, 2023, the bank has stated. Additionally, according to the RBI, SBI FML must make sure that its total stake in HDFC Bank never exceeds 10% of the bank's paid-up share capital or voting rights. Auto parts maker Pricol has expressed its objection to the Competition Commission of India on Minda Corp's plan to buy 24.5% stake in the company. In the 7th episode of Corporate Central, we had told you that Minda had sought approval from CCI to buy an additional 24.5% stake in Pricol, its biggest rival in the two-wheeler instrument cluster business. The promoters who hold 36.53% stake in Pricol had objected to the purchase, saying that they do not have any plans to sell. Minda Corp had said in February that this deal is only a financial investment, and the market also believed that Minda Corp would buy up to 26% stake in Pricol. And shifting focus to all the major corporate giants that were on the radar this week, let's take a look who were those. First up, the aviation sector. Go First is planning to resume its flights from May 27th. For the cancelled flights, full refund will be issued to the original mode of payment, the airline has said. Also, Go First says that it has access to around 300 crore rupees of funds and expects to start operations as soon as possible. The VodaIdea Group Airlines' plea for insolvency was admitted on May 10th, and Abhilash Pal was appointed as the interim resolution professional. Pal has already invited claims from creditors, which will be received by May 23rd. Meanwhile, low-cost carrier Indigo has asked American engine manufacturer Pratt & Whitney to quickly provide engines for the airline to press its grounded planes back into service. Also, Civil Aviation Minister Jyotiraditya Scindia has asked Pratt & Whitney to supply engines to Indigo at the earliest. Meanwhile, Aircastle, an Ireland-based lessor to SpiceJet, has informed a tribunal that settlement talks regarding unpaid dues were inconclusive. SpiceJet owes 50 crore rupees to the lessor and has been granted time till May 25th to reply to the plea. The Supreme Court on Wednesday gave SpiceJet time till July 18 to pay the settlement amount to Credit Suisse in the $24 million dispute. Credit Suisse told the court that while SpiceJet had made some payments, an outstanding amount of around $4.4 million is yet to be paid. An expert committee appointed by the Supreme Court to investigate allegations around Adani Group said on Friday that it was not possible to conclude if there has been regulatory failure on stock price manipulation allegations. Meanwhile, the Supreme Court on Wednesday gave SEBI an extension till August 14th, 2023 to probe the Adani Hindenburg case. The markets regulator had sought 6 more months to complete its probe. Supreme Court had initially granted 2 months and has now granted 3 more months to SEBI. Supreme Court said that the SEBI can share a status of probe in August, and if there is a genuine issue, the court will consider. In more news, the investment division of Goldman Sachs Group drastically decreased its exposure to the Adani Group in its ESG portfolios in the weeks following Hindenburg's allegations. Also, 2 Adani Group companies, Adani Enterprises and Adani Transmission, received board approval to raise 21,000 crore rupees through QIP placement route. Further, Adani Enterprises has revived its capex plan after a 4-month pause with a planned initial investment of $1.5 billion to kickstart its new business. Vodafone Idea lost 1.3 million 4G users in February, the steepest decline in 21 months for the loss-making carrier. According to analysts like Jefferies, VI's 4G subscriber decline in Feb 2023 was its highest 4G subscriber decline in over 20 months, suggesting that 5G rollouts by Bharti and Jio are putting pressure on its 4G subscriber base. This has highlighted the threat to the carrier's market share in all telecom circles, but primarily in metro and A-level or high revenue yielding circles where the company's share has been impacted the most. Further, while pegging the value of its stake in Vodafone Idea at zero, London-based Vodafone Group has said that the Indian company still needs additional liquidity to survive. It said that there are significant uncertainties in VIL's ability to make payments of remaining liabilities, and it is unlikely that any payment will come from the Vodafone Group. Country's largest multiplex chain, PVR Inox, touched a 52-week low of 1,403.40 rupees on Tuesday, May 16th. PVR Inox, which is a new company formed after the merger of PVR and Inox, has declared its results for the first time. And the results have been very disappointing. The company's losses have increased by 3 times, even as income almost doubled. Losses in Q4 went up from 95.6 crore rupees 3 times to 285.7 crore rupees. However, the company's income has increased by 111%, that is 2.1 times to 1,164.7 crore rupees from 552.6 crore rupees. And the company has returned from operating loss to operating profit. The company has also earned a working profit of 26.9 crore rupees as against the working loss of 17.8 crore rupees in the same period last year. The company will add 150 to 175 new screens in FY24, and it is also said that 50 cinema screens which are making losses will be closed in the next 6 months. Apart from this, the board has also approved to raise 100 crore rupees through NCDs. And a year after hitting the markets with an initial public offering, shares of Life Insurance Corporation closed at 565.35 rupees on Friday, nearly 40% below the issue price of 949 rupees. The insurance company has lost close to 2 lakh crore rupees in market capitalization since listing. Last May, the insurer sold over 22.13 crore shares to raise 21,000 crore rupees at 949 rupees per share. In more news, Life Insurance Corporation's new business premium fell by 50.41% year-on-year to 5,810.1 crore rupees in April 2023 over last year because of a massive decline in group single premium, according to a report in Business Standard. New business premium for the entire life insurance industry too declined by 30% in April from last year. Reliance Retail and the Adani Group have opted out from the final round of bidding for Future Retail. This was as per several reports on Wednesday. It stated that 6 final bids have been received for Future Retail. The highest bid is from Space Mantra, while 5 other companies have placed their bid for parts of the company. These 5 bidders are Pinnacle Air, Palgan Tech, Leher Solutions, Goodwill Furniture and Sarvabhishta E-Waste Management. Meanwhile, documents have shown that 9 companies related to Future Retail have claimed more than 2,100 crore rupees as operational dues from the debt-laden firm, forming almost a quarter of all operational dues under its insolvency resolution. The retail chain has been under insolvency resolution for about 10 months now and has received claims of 9,306 crore rupees from operational creditors. While that was all about corporate world, let's take a look at what took place in the startup world this week. Food delivery giant Swiggy is witnessing another markdown in its valuation by an investor. A fund managed by US-based asset management firm Baron Capital Group has slashed the valuation of Swiggy by 34% to $7.1 billion as of December 2022, according to filings with USA's Securities and Exchange Commission. Baron Capital Group, which reportedly holds about 0.7% stake in Swiggy, had earlier marked down Swiggy's valuation to $6.7 billion as of June 2022, 6 months after buying a stake in the company. It then later raised it to $7.1 billion. The valuation cut is the second such action by a US investor for the Indian startup. In the past 2 weeks, Swiggy, Ola, Byju's, Farmeasy and Pine Labs have seen their valuations cut drastically. Further, Swiggy said on Thursday that its food delivery business achieved profitability in March, less than 9 years since its inception. In a blog post, Swiggy's chief executive and founder, Sriharsha Majety, has said that the peak of the company's investments was behind them, having made disproportionate investments in its grocery delivery service Instamart, which competes the Zomato-owned Blinkit and startup Zepto. And a day after all co-founders of Zest Money decided to step down, the Bengaluru-based digital lending startup has announced a new leadership team. The company's Senior Vice President Growth Abhishek Sharma, Chief Banking Officer Mandar Satpute and also Vice President Finance Mohit Chajar would be taking charge, Zest Money has said. EdTech giant Byju has closed a 2,000 crore rupees round from Davidson Kempner Capital Management, a US-based investment firm, in a structured instruments deal. This is part of an ongoing $1 billion funding round the Bengaluru-based firm is raising in a mix of equity and structured instruments in its current valuation of $22 billion. Around $700 million of the $1 billion is expected to come through equity, for which Byju is in talks with existing and new investors. These include investors like Abu Dhabi's sovereign wealth fund ADQ, Byju was in talks with Davidson Kempner Capital Management, Oaktree Capital Management and also Apollo Management among others, and has decided to move ahead with Davidson Kempner according to sources. In further news, lenders accused one of India's hottest tech companies, Byju's Alpha, of hiding $500 million as part of a fight between creditors and the self-proclaimed biggest education technology company in the world. With that, it's a wrap on Companynama this week. We'll be back next weekend only to keep you posted on all the corporate and startup world updates. And for your daily dose on corporates and markets, watch our daily show, Corporate Central. Stay safe, have a safe weekend, and don't forget to tune in to Money9.